6 hidden income ETFs with no NAV erosion. Welcome back, everyone. I'm Doug, the Retirement Guy, and today we uncovered an overlooked high yield funds that are balanced, sustainable income with price preservation. Its strategies, history, and the total returns performance is what we're going to cover today. Now, some of these, I'll say right up front, some of these ETFs were actually brought up by members. They left comments down below. Could you research this? Could you look into this? And we always want input from our viewers. We always enjoy that. So I found what I call 6 of the hidden income ETFs for people who are tired of hearing about QQQI and SPYI and TAP alphas and all that. That what else do I have that will go in my portfolio, my retirement account, that are not maybe all covered calls or not all, just tied into the S&P 500. What else is out there? Now, before we go any deeper, I got to just give you guys a pre-warning that this video is really for educational. I am not a financial advisor, so past performances don't guarantee any future results, and this is for educational. If you need financial assistance, always contact a financial advisor or professional. So how we found these things, these 6, and I always say up front it was thank you to our viewers. Our comments come from down below. And then also I do a little screener, the initial wide net search to scan for the entire ETF universe without a issuer base. So what I mean by that is I'm not going just the popular stuff if people have made comments that we're looking to just get views. I'm like, no, that's not why I invented this channel. It's not why I do this channel. It really is, I want to help everybody do what we can do, and we use the data sources to try to find the right ETFs. So I use some filters out there. I wanted ETFs only, no ETNs, no single stocks, no nothing. I wanted yield of over 6%, and I wanted some long-term 3-year minimum returns to see what was out there. And then I also want some strategy that is sustainable. I don't want something that's a flash in the pan, like a lot of weeklies have been. A flash in the pan, good today, gone tomorrow, or destroy the NAV over time. Because in retirement, we need our NAV. We need to keep our value up. Then we want to know the payouts. We're looking at monthly or quarterly. I'm not looking for annual or anything like that. I'm not looking for weeklies. I'm looking for monthlies or quarterlies. And then I wanted to see the fund size. I wanted to see does it have liquidity? Does it have exposure to risk? What's the assets under management? So some of them that people put in, unfortunately, didn't make our 6. Some did. So let's get deeper into this for you. The one big thing that I need to talk about, and I tell you what, I think this is just a keyword that's used in YouTube by some people. They have all their own explanations of what NAV erosion is. That just blows my mind. But the real true definition is when a fund's distributions exceed its earnings, forcing it to return your own principal as yield, primarily lowering the share price, the NAV, the net asset value. So when we say this, this is where people start getting confused, is that there is a difference between a price drop and a NAV erosion. So again, like I said, I'm not dicking on anybody. I'm not trying to pick on anyone's, idea, but NAV erosion, that's the true definition of it. So what you need to look at is look at the long-term price charts. If it slopes down to the right consistently, regardless of market conditions, the high yield is really a mirage. And the golden rule is, as I've been saying on the show for a number of videos, and that is total return is greater than yield. It is critical to have the price return is flat or positive over time. You can't retire on income if it's your own capital that's shrinking it coming back to you. Here's a great case study that I've done before, and I had to explain this to one of our Patreon supporters, big time here, is 2 Russell 2000 income funds. He tried to explain to me that he is making more money with IWMY than than I am with IWMI, because we did a video on IWMI that, this was another piece of a retirement package that we wanted to do. And I'm like, okay, I'll let him talk. And he came back and says, I'm making 57.56% yield. You're only making 13.67. And I'm like, okay. Total return. He's making 13.73. I'm making 21.7. So I'm like, okay, how in the world are you even close to this? And so what we did is we sat down with him and explained, look at the yields. You can tell me all day long, 57% over 13. I can do simple math. You are right. Okay? You are making 44%, or excuse me, 34% more money on yield. But how much of that money, of that yield, is either your own money coming back to you? And that's the point he couldn't understand. And so when I laid this all out and I put it in the chart here, I kind of laid it out to him and said, look it. Green is going to be my NEOS program, IWMI. The red's going to be your Defiance, IWMY. Look at the numbers. Okay? Price. My price is just a hair over zero. Okay? But unfortunately with this chart, the way I did it, it's not great. But it's basically about a 7% growth in the fund, while your price is down over 30%. Okay? When we take a look at total returns, yes, you have a positive return, but you're really only making 13% from your money. I'm making 21%. So we go down the price action. There we go. It's 4.10%. I'm stable. You're eroding at negative 30%. Your long-term drawdown, mine's minimal. Yours is down 67%. You're getting weekly, which is awesome. I know what you're trying to do. You're trying to get a paycheck every week from it. I'm getting monthly. I'm very conservative. But if you don't get, realistically, you're only getting 13% at the end of the year, not your 57. So this is where we start talking about NAV erosion. You have to understand it, and you have to understand across the board and why total returns mean everything. So here's where I started going to. This fund here, Overlay Shares Foreign Equity ETF. This was actually from one of our viewers. It's an international exposure with option income strategy. Now, the fund is actively managed and it provides exposure to non-U.S. equities. Some people may like this, some people may not. Most portfolios will have a little sliver of foreign affairs into it, just because you don't have all your eggs in that same U.S. basket. Not that I'm against the U.S., totally positive with it, especially with the Olympics team doing what they did. I give them full credit to the USA. But even so, in investments, they don't care where you're from. They want to know, are we making money? This fund, again, 6.65% yield off of the growth of the fund. 1 year price return is up 27.25%. So this was a great growth fund with income. And that's where I would put it in my growth category. Total return, 36.92%. So this fund is really, where does it fit? Well, as I told you, total return focus is 25% or above. So it really is not cannibalizing your capital. It's not big income, 6.65%, as I said. So this is why I put this in my growth bucket, to help grow that 27%. Now, these numbers were all custom to change. They'll change on a regular basis. But it also gives you some diversification. Exposure to Mexico, Brazil, non-U.S. markets. And with that balanced yield, it's low enough to sustain, but it's high enough to really make a matter in what's going on. Now, the one thing I do have against it, it was a quarterly payer. I will say that. It is a quarterly. I wish it was a monthly, but unfortunately it is a quarterly. And the income checks the fluent with option premiums and the foreign equity performance. So I was, again, very strong fund. It's something, I know I'm repeating, but we'll put it into one of three buckets. It's either going to be our foundation bucket, our growth bucket, or our income bucket. And this one here, even though we say income, I would put this personally in my growth bucket because of the big price return. Now we get on the Curve Silver Enhanced Income ETF. This one here, I'll give it credit to everybody. We found it in our own research. We found it. It's been something I've been watching for a while because of the silver pricing going on. We've had a few of our viewers comment about it. But basically what this one is, it's a fund that is actively managed seeking to maximize total return through investments in silver, silver bullion related ETPs, and derivatives. The fund aims to outperform the physical silver. Okay, now this one came out of 2025 of September 29. It did break one of our rules, and that's why I said it was partially, I added it because of our viewers asking for it. And this one falls into since September of 25. The dividend yield right now is 7.27%. Again, not a huge one, but the price return, again, 68.21%. For a total return of 84.76. Now, this has that massive, what we call massive income. When silver runs and it price out, it can create some huge distributions and huge price returns. Bull market play, it's best utilized when silver is trending up or flat, not downward. A lot of people talk about silver as the new gold, that it's going to play into that. It has had some legs to it, and we want to keep covering and watching what's actually going on. But KSLV, with the price increase, with the dividend, this one can actually fall in two different categories. This could be an income piece at 7%. It could be right in the growth piece very strongly. And I've said this before, when you take one of the categories, you can break that category down to maybe have precious metals, income, and so on inside a growth fund. This one does pay out monthly, and it does use a covered call strategy program. But because silver's ran so well, you're seeing a big increase into it. Now, TUGN, we've covered this one before in a couple of our different videos. This is a tactical asset allocation with the Nasdaq and Treasury. So what these things are doing here is, again, it's an actively managed fund. I'm really liking to see a lot of active managed funds, and it allocates equities, fixed income, and money markets depending on signals derived from their system, their analog system that tracks the price action across the asset classes. This one I heavily put into my income fund because of that 12% yield. Okay, now remember, we're not chasing yield, we're chasing return, total return. Total return onto it is 11.97%. Okay, so the return is maintaining primarily from income. And if the price turns around, which with right now in the way the market is, we are in a flat, what I call a flat turbulent market. We don't know if interest rates are going to come down. We don't know what's going on with tariffs. We don't know. We don't have a lot of direction of what's happening in the marketplace right now. But the reliable monthly distribution, even in these times, is right on that 12%, acting like a true paycheck. And that's why I put it into my income category. The risk, the ability to rotate into treasuries can limit the drawdowns during crashes, which is a big positive to it, is that they can rotate everything right immediately into treasury bonds and hold off there. And despite the slight price drip, the total return remains positive. Okay, over 3 years, this thing's over 21%. 1 year, 11.97%. Now, positive pays out monthly. Okay, it's a highly sustainable program. It dials itself right in pretty much between a 20 to 26 cents per share over per month. So I'm really liking that the STF Tactical Growth and Income Fund. There's a lot of pieces to it. We've done other videos on this one about it. It's been in our top 10 many a times. So it's just another one of these things of, hey, People don't always, it's not a common thing. It's not one that's popular for people to talk about. But in an income fund, this is almost like hang your hat on and relax. Now, USG, which is USC Gold Strategy Plus Income Fund. This one got very intense in a lot of attention. This goes again, came from our research, what we have found. It's an exchange traded fund that mostly invests in gold commodities. The fund, again, actively managed, aimed to provide gold exposure while generating income through a gold covered call strategy. You know, the nice thing about gold is one of those pieces that you set and you forget and you hope the price goes up, but it doesn't generate income. And what these guys are able to do with that covered call strategy is that they're able to generate both price increase and income. And why it's one of the things why it made it our list. Distribution, 23.23%. Okay, that's a big yield hanging out there coming from those covered calls. The 1-year price return. Now, a lot of this comes because gold has taken a run, 26.51%. So total return, 61.10%. I mean, if you can get that each and every year, we'd love it. Is it guaranteed? Definitely not. None of these numbers are guaranteed. This thing does pay a quarterly. So it does pay its distributions quarterly, and it is highly variable. Okay? It all fluctuates of what's going on with gold, what's going on with the economy. How does it affect? It is a huge commodity item. It captures the upside of gold rather than capping it strictly. That's the unique piece to it. It does capture that upside. There is some massive yields that we talked about with that almost 24%. And the no NAV erosion, a 23.81% return provides the payout without disrupting anything recently. This thing has been paying on a regular basis. Now, it does have a small assets under management of about $15 million in assets. So that is one thing I have to say to beware with it. And the volatility, it's not really a steady paycheck as the boom and bust income stream. It can come and go. And that's why I said consistency is highly variable, is that it's not a just consistent 20 cents, 30 cents. I've seen massive payouts on this thing up to $8, almost $9 in a 1 month payout. So it's nothing that you can set accordingly. So I would put this in my income fund. I would put this, actually in both funds, in income or growth, split them. No one says you can't have it in both buckets. Because you have the great growth, you do have the security with the gold side of it, and you're getting the big dividend income, which can help everything out. But this is not one to hang and put in the trophy case and say, this is what I'm retiring on. It's just an add-on piece to your buckets. Now, TYLG is the Global X Info Tech Covered Call and Growth. This one, I think, is probably the unique piece that I liked. It does hold the funds in the S&P 500 technical stocks and sells once a month at the money call options up to 50% of each stock. It's I'm going to call it a hybrid strategy again. It's one of these strategies that are trying to generate your growth and income together. The yield of 8.26%. With that 50-50 split, they've actually been able to gain the price about 3.18% increase of the fund's value. It does pay out monthly. It is a variable option payout, so we don't have a steady flow across the board. This is definitely triggered as an income play for me. I don't see enough in the growth to put it in the growth category. I really see this as an income play. Total return from the hybrid package, 12.52%. You can't beat that one. And I like that they're only 50% of it is covered, and 100%. Basically, a lot of people cover 100% of their funds. These are only covering 50. That's why the numbers are down a little bit, but a good positive between the two. So the upside capture addresses the main complaint of covered call funds missing bull runs. These guys have it. Very similar to what Rec Shares have been trying to do in that weekly side of things. The NAV protection, the growth component helps offset the price drops with the payouts, and the monthly payers on a consistent schedule through the amounts will vary, and it is volatile, so you need to watch that. Now, this is a tech concentrated fund. So heavy Nasdaq exposure, S&P 500 exposure. So it's looking at getting tech out of everywhere it can. So if tech has a slowdown, or I hate to say the word crash, the NAV will drop. So, again, this is not one of those things of set your hat, forget it, and don't even worry about it. You do keep an eye onto it. You do need to watch it. That's why you watch your total return. The lower yield, again, 8% is lower than the normal 12% that the yields are doing. But how many of them do you see a 3 to 4% growth and an 8% return in a 12% fund? You don't. Now, the next one and final one is IQQQ. Now, a lot of people will sit here and say, well, what are you talking about? I've heard of this one before. Yep, you will. But it doesn't get the attention that it really deserves. IQQQ from ProShares is their Nasdaq 100 high income ETF. You'll see the QQQIs, you'll see all the other ones that are out there. But this one here just silently kind of gives you that portfolio stability, kind of quiet across the board. 9.93% yield with a 2.01% growth on a 14.04% total return. Now, it does pay out monthly, and it does have that high consistency, generating reliable income monthly from their diversified credit portfolio. Now, it's ballast. There's really they say no NAV erosion. We don't see NAV erosion in the fund. We can see the total return. You can see from April 2nd, it recovered very, very well and very quickly to get back up to that 14%. So this is another play into the Nasdaq category to give you income with some protection of growth. And that's where I'd put this one. Now let's take a look at the key takeaways and the comparison between those 6 different funds. And you can see the silver and the US gold, both with considerable growth. You're looking at 68.21%, 26.51% for the gold. And then the total returns of 84% and 61%. You can see they outshine each and every one of the other funds. But when we take a look across the board, this is what's unique about this. They're all pretty much on yields are at that, I'm going to throw an average out there and say it's about a 9% average across the board on yields. But every one of them also gives you double digits in the total return section. So depending on what you're looking for to add into your portfolio, as I've talked about, they go in different markets, different segments of your buckets for retirement. So we did this really to give you an idea. One is you're not chasing yield. You're chasing total returns. You're looking at the package between the yield and the growth of the funds. And what are you at? Are you looking for an income package? Well, some of these fit very well. Are you looking at something to add to the growth package? These can work very well. And these are time tested. They have many years, other than the one fund that I mentioned, was definitely, they all have that well over 3 years. So what I ask is, what is the most important part of your strategy? Are you looking for those higher highline yield or better total returns? Do you prefer the consistent monthly payers, or are you open to the quarterlies? I'd love to hear what your thoughts are. Put it down below in the comments. And especially, is this helpful for you? Because I don't want to make videos that don't help you in your retirement search and your retirement ways of looking for new adventures and new ways to create money. So let me know your thoughts. Leave them down below, and I appreciate it.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments